Ola Electric zooms more than 10% as it releases its Roadster range of electric motorcycles. Brokerage's HSBC issues a buy rating even as net loss widens in the first quarter. Hindustan Zinc falls over 7% as promoter Vedanta increases the size of its offer for sale to 13.37 crore shares compared to 11 crore shares earlier. Electronic Marts shares rally but cool off from the highs of the day after a big block deal which sees over 8% equity worth 712 crore rupees change hands at 232 rupees a share. Aurobindo Pharma comes under pressure as the company receives a warning letter from the US FDA for its UGA Unit 3. And the Nifty IT index continues to be the top sectoral gainer, rallies for the fifth day in a row following cues from the tech-heavy Nasdaq's recovery as recession fears ease in the United States.
Hello and welcome to Chartbusters. I'm Nigel D'Souza and joining me today is Hormuz. Well, Hormuz, it's that sort of a day yet again. The overnight Q was pretty good. We opened up gap up, but we were unable to sustain at higher levels. And early this morning, it pointed out that around the 24,350 to around 24,400, that could be a level where we could see some supply. And Pat, from those highs of the day as well, we have come off a little bit. The breadth of the market is still in favor of the number of stocks advancing. But I think, that buy the dip is going to be tested in today's trading session because we've got that dip. Let's see whether or not we can bounce up from here.
It's been the story for almost the last week or 10 days, right? The Nifty has struggled to cross that mark of 24,350. And you could see, pull up the chart that shows the fall from the highs of the day. That's the chart we are looking for. And it's been a struggle for the Nifty. We're getting to 24,350, but we have not been able to cross that. Even Wednesday was a range-bound trading session. We only managed to get to 24,200 then. And for the week, we still remain lower. 24,367 is the level that we need to focus on for the Nifty to end positive for the week. And if that does not happen, the Nifty will fall for 3 weeks in a row. And the last time that happened was between July and August of last year. So it shows the kind of market that we have been in. But so far, it's been that story. The high is just not able to sustain.
All right. Well, let's focus on a stock then. Sarda Energy and Minerals. Well, that stock has been on fire in the last few days. Now, the company's resolution plan to acquire SKS Power, well, they have got the green signal from the NCLT. To understand more on this, as well as the way ahead, we're joined by Mr. Kamal Sarda, who is the Managing Director, as well as the Chairman of the company. Hi, Mr. Sarda. Thanks a lot for speaking to us here on CNBC-TV18. A rare interaction is what we have with you, but that's telling you the kind of news that's come in with regard to SKS. Well, give us a couple of details. Now that you've got the nod from the NCLT, is it a done deal? Or do you think some of those competitors that were vying for this asset, they can approach the Supreme Court?
Yeah, it is done deal. And whosoever trying actually to oppose it, they have to first go to INCLAD and after that Supreme Court. And when COC has voted 100% and INCLAD already actually heard us and given a good order in our favor. Also, NCLT has given favorable order. Very remote chance for others.
Okay, so you believe that it's a done deal then. So congratulations, Mr. Sarda. And this is something that the street was really waiting forward to. And that's why I think, in the matter of the last few days, the stock has moved up from around that 260, 270 rupees all the way to around 330 rupees. Let's understand further aspects about this deal. You have to pay around 1,805 crore rupees. Could you give us a few more details? How do you fund this? And what is the balance sheet of the acquired entity looking like, SKS Power?
Actually, SKS will come as free of debt.
Okay.
And already we have arranged finance and we'll fund actually this SKS from internal accruals and debt. That won't be more than 1,550.
Okay. You're saying that from internal accruals as well as debt is what will fund it. And out of the total 1,800 crores, how much of it will be debt? I missed that number.
Say 1,800 is not correct figure. It may go up to 2,000. Okay. And 500, approximately 500 to 600 from our side. and rest will be the debt. And
Is there any... Yeah.
Sarda standalone is a debt-free company.
Correct. Got it. And this, you're considering it as 2,000 crores because there'll be some capex to get the plant up and running. Could you quantify how much is that capex you have to incur to get SKS, or all of that is included in 2,000 crores?
It is a running plant, and NTPC is managing it very well. And there won't be any cost on running the plant. Am I clear?
Yeah, no cost you'll be incurring to get the plant running because it's already a running plant, correct?
Yeah.
Okay. All right, sir. You have given us this turnover number of the plant as of last year, which is very helpful, 1,367 crores. But what kind of margins does this plant do?
Actually, it will have minimum of 30% to 40% EBITDA.
Right. Mr. Sarda, since you are planning on doubling the capacity at that plant of SKS, what is the targeted EBITDA that you are aiming for once you manage to double that capacity? Could you share a number on that, sir?
That's what I said, actually, minimum 30, and it can go up to 50%.
Oh, okay.
Yeah,
30
I don't think so. Cost of all will depend on the realization of power rate.
Okay.
Because in this configuration, actually about 30% to 50% will keep as medium-term power supply, and rest will be short-term. And for medium-term, where we have PPA, we'll get coal from Coal India at IPP rate. It's a concessional rate. And rest will be from our mine.
Okay, all right. So now at 600 megawatt, what is the total coal requirement, sir? If you could give us in million tons, what is it? And how much of that will come in? You have a mine that's only 60, 70 kilometers away. So how much you will take from your own captive mine and how much from Coal India you will require?
Say about, I will give a rough figure, about 400 tons of coal every hour at 100% capacity.
400 tons every?
400 tons per hour.
Okay. And how much will it come, sir, from, how much of it will come from your own captive coal mine?
Say it will come, we'll try to give, if it is short term, we will supply from our coal mine, and we are increasing the capacity from 1.8 million ton to 5.2 million ton, and that is under process in anticipation of SKS requirement.
So we'll have to understand in further detail about how this goes, but going by what you're saying, the current 600 megawatt plant that is running will give an EBITDA on an annual basis of at least 500 to 600 crores. Is that correct?
I think so.
Okay, got it. So that's about the current...
I can confirm actually after stabilizing the plant in our...
Correct.
Right.
No, because you've given us around 1,350 crores of revenues, 30 to 50%. We are just extrapolating the number. So in the vicinity of 5 to 600 crores is as of now what things stand. Now, you're also indicated that you have the probability of going ahead and increasing the capacity by another 600 megawatt of capacity. Timeline for that and capex you'll have to incur for that.
Yeah, first we will stabilize this plant at 100%, and simultaneously, parallelly, we'll appoint some consultant, because there are possibilities that we can go for 2 into 300 or 1 into 600. And after that, actually, we'll go to our investment committee and then the board. But we will definitely, surely aiming for making it 1,200 megawatt. And normally, after taking a decision, it will take 3 years to 4 years maximum.
Okay,
With
so
all
3 to...
with all the infrastructure of 1,200, like material handling and water supply already in place, even evacuation is in place.
Correct. Just to understand, sir, when you're to go to 1200, you will take around 3 to 4 years approximately. And capex that you'll have to incur, we missed that number.
Approximately 6 to 7 crore per megawatt.
6 to 7 crores per megawatt. So that will be roughly around 600 multiplied by 6 crores. That will be a very large number then, sir.
Which one?
To take your
it will be around 4,000 crore plus minus, say. I can give you figure actually after consulting to consulting firm.
Okay, so around 3,500 to 4,000 crores to double your capacity. Are we getting those numbers correct?
4,000 to 4,500.
4,000 to double your capacity, to go from 600 to 1,200. And at optimal levels, you'll be able to, at 1,200 megawatt, you'll be able to do at least 1,000 crores of EBITDA.
Yes.
Okay, got it.
One final question from my end, Mr. Sarda. The Supreme Court decision that came in on Wednesday about the retrospective taxation, about the state's ability to levy taxes on them. Is there any impact on Sarda Energy per se? Do you have any retrospective claims pending, sir?
No, we don't have.
All right, Mr. Sarda, we'll leave it at that. Thanks a lot for sharing with us your thoughts on the acquisition, for the favorable verdict that has gone in your favor as well. That was the management there of Sarda Energy. Time to shift focus then to our special segment where we get you a few ideas for profit from Money Control Pro. Lekha Badlani of moneycontrol.com joins us now to talk about a stock that she's tracking very closely.
The stock pick is Dhanuka Agritech. Now, talking about its recent first quarter results, its revenue grew by 34% YOY, which was driven by a volume growth of 39%, which is quite impressive. Now, its gross margin expanded by 180 basis points and EBITDA margin increased by 270 basis points to 14.5%. The company has received positive market response for its recently launched products, and it further plans to launch 2 9(4) molecules and 1 9(3) patented molecule in the next 6 months. The new Dahej plant contributed around 14 crores to the top line, but the EBITDA remained negative. However, we think there are ample opportunities from this plant with respect to captive consumption, technical exports, and contract manufacturing, thus having the potential to improve the margin profile of the company. The management expects this plant to become profitable by FY27. Also, compared to the international markets, the domestic agrochemical market remains robust, and pricing also remains healthy for specialty products. Supported by a richer product mix and the possibility of above normal monsoon, Dhanuka now expects lower double-digit revenue growth in Q2. The full year FY25 revenue growth guidance has also been revised upwards to 18 to 20%. However, it expects gross and EBITDA margin to decline by 100 basis points each, owing to the higher base of last year and negative margins of the Dahej plant. Trading at a PE of 27 times FY26 estimate, Dhanuka remains reasonably valued for a long-term buying opportunity.
Dhanuka Agritech there from Money Control Pro stock also in focus because of a share buyback. Time for a short break. When we return, we'll be joined by Navneet Kumar Saraf, the CEO of Technocraft Industries, to discuss their quarter gone by. Stay tuned, back on the other side. Back with us here on Chartbusters, a similar story playing out for the benchmark indices. The Nifty struggling to hold on to that mark of 24,350, but still trading with gains of 100 points, 0.5% higher. The IT stocks are continue to lead the gains, currently 1.8% higher. The IT index is among the top sectoral gainers. The top sectoral gainer is actually the Nifty Realty index, and that is the top sectoral gainer, trading with gains of over 2%. The broader markets are doing well for themselves, 1% higher for the small cap index, 1% higher for the mid cap index as well. So overall, the broader markets are doing well, but all eyes on the Nifty, whether it manages to stage some recovery from the lows of the day. But moving on then onto the next earnings interaction we have is Technocraft Industries. The company reported a 5.5% decline in its net profit on a year-on-year basis. The revenue, however, was up. But Navneet Kumar Saraf, the CEO of the company, is joining us now to discuss the numbers in greater detail. Mr. Saraf, good morning. Thank you so much for joining in. I'll start off with the margins straight away. They were down on a year-on-year basis. If you could elaborate what impacted the margins this time around, and they have been below that 20% mark for last few quarters now. When do you see that going back to that level of 20% and then beyond that?
Yes, good morning. Thank you for having me. So, yes, the margins compared to the first quarter of last year are a little lower this quarter. Having said that, we are better than the preceding March quarter. The main impact on the margins have been, a reduction in volumes in our scaffolding business compared to the first quarter of last year. But it's actually picked up over the last 2 quarters. We had some slowdown in the European markets and, due to the ongoing Ukraine crisis, but that's actually picking back up. The India business has also been doing well. So as a result of that, we are seeing the margins coming back. The drum closure business also has been improving on the margins front. So I think overall, while still lower compared to the first quarter last year, but on a quarter-on-quarter basis, it's been increasing.
All right.
Do you expect to end FY25 with a margin of 20% plus?
Yeah, so, there are numerous things happening in the scaffolding business. We have our new plant in Aurangabad that's getting commissioned. So we'll see some effect of that in the last 2 quarters. So I would expect we will. Yes.
Okay, all right. Hi, Mr. Navneet. Good morning and good to see you win. Just a quick question. The couple of your segments are still making losses. That's the yarn and textile business, which is smaller in comparison to the others. That moves back into the black. You'll have done some measures. You'll have taken some measures, I think, the last 6 months or so to see a turnaround. Does that go back into the black in the coming quarter?
Yes. So, that segment has been challenging for the past couple of years. However, we are seeing some improvements. We relocated the yarn plant to Amravati, where the costs were lower. The product mix was improved. We are seeing some improvement in the realizations and the market in general. So I think the ongoing quarters should be better for the textile business. While the first quarter was in the red, it was also impacted by very heavy depreciation costs on the new plant and equipment that was there. So on a cash basis, it was actually positive. So we expect better results for that also in the ongoing quarters.
So you spoke of the scaffoldings business, Mr. Saraf. That's your largest business, if I'm correct. And barring the formwork division, the volumes have risen, but the margins and the ROCE have seen a decline. Now, is there pressure on realizations within this business, Mr. Saraf? And if you could also share the kind of order book that you are sitting on for this particular business and the business overall as well.
Yeah. So there are 2 parts to the scaffolding business, the scaffolding and the formwork business. The scaffolding business is almost 100% export based. That's largely based in the US, and it's been doing very well. It's steady. We don't see much impact on margins there. The formwork business, which is the aluminium and steel formwork business, is largely domestic. There's been increase in the cost of raw material, mainly aluminium there, which has impacted the margins. The volumes, though, are pretty good, and we are sitting on strong order book on the aluminium formwork business. As of now, we're sitting on about 6 months order book on that, which is why we're also increasing our capacity, and we're also doing backward integration there by putting up our own aluminium extrusion plant.
Okay, all right. A quick question then, sir. Gradually your PAT on a quarterly basis is slowly moving to around that 100 crores mark. For this year, do you think, going by all the measures you have taken and put everything together, do you think a net profit number of close to around 500 crores is possible in this year? I recall the last time we chatted with the management of Technocraft, we were flirting with the number of 250 crores for last year, that's FY24, and doubling the profitability in the coming year. So is that on the cards?
Not in FY25 because in this year we will not get the full impact of our greenfield plant in scaffolding in Aurangabad. We'll only have impact of about 4 months of that. But once that is fully commissioned, the full impact of that will be seen in FY26. That new plant will add about 450 crores on a year basis to the top line for the scaffolding segment and about 80 crores of profit. So once that we see the full impact of that, yes, we'll certainly touch 500 crores of PBT. But that'll be in FY26. FY25 will be somewhere in between.
One final question, Mr. Saraf, on the buyback, sir. It's not the first time that you have announced a buyback. You've done one in 16, 18, you did one in 22 as well. But I wanted to ask you in particular is because was this in the works earlier itself, or has this decision to undertake a buyback being done after the announcements that were made in the union budget with regards to the buyback and the taxation aspect of it?
No, so, as you've seen, we have always focused on buyback. We've done 3 buybacks before this. So buyback is something that we believe in and we would always like to do. So this was always in the works. Obviously, it's been accelerated as a result of what's happened. But I mean, it was always in the works for us to do a buyback this year.
Okay. All right. Very quickly, FY26, 500 crores. FY25, somewhere around 350 crores net profit.
Yes, we should be somewhere close to, somewhere better than that, yes.
Appreciate you joining in, Mr. Navneet, and giving us all of those details. So 350 crores plus for this year. We'll hold you at that number. Wishing you all the best. For the time being, slip in a short break, come back, continue to focus on markets.
Welcome back to Chartbusters. The Nifty is around 24,250. 24,367 is the level to watch on the index on a closing basis if the Nifty has to end the week on a positive and prevent a 3-week losing streak. The Nifty Bank still below 50,000, but the broader markets continue to do well. But that's a wrap on this edition of Chartbusters. From Nigel, me and the team that put this show together, thank you so much for watching. Trading Hour takes the action forward.